Welcome to today's webinar, which is entitled ACA Reporting, Simplifying the Complex. My name is David Lindgren, and I will be your presenter today. I am the Senior Manager overseeing our Compliance and Public Affairs divisions at Flexible Benefit Service Corporation, or more simply, we're referred to as FLEX. I have a couple of housekeeping items before we get started today. In the event you are dialing in by phone for the audio portion of today's presentation, please be advised that your phone will be muted throughout the duration of the webinar, and that's so we can eliminate any background noise. In addition, if you do have questions in today's presentation, please go ahead and type those into your chat function or your Q&A function on your computer screen. And time permitting, I will address as many of those questions as I can at the end of the presentation. In addition, today's presentation has been approved for one general HRCI recertification credit, as well as one SHRM professional development credit. In order to receive credit, you must stay on the webinar for the entire duration to qualify. Now, before we get started, I do have a couple items I'd like to address just in regards to who our company is, as we do have several new faces joining us on today's presentation. Now, as I mentioned, our company name is Flexible Benefit Service Corporation, or more simply, we go by FLEX. This year will be our 28th year in business. We were founded back in 1988. We are located in Rosemont, Illinois. We have approximately 75 employees, and we have three different business segments. We are a third-party benefits administrator, we are a general agency, and we also operate our own exchange and marketplace services. Now, very briefly, in regards to our benefits administration division, we offer various products and administer those on a third-party basis for employers, including both health and dependent care flexible spending accounts, health reimbursement arrangements, health savings accounts, COBRA, and we also provide a number of different compliance services and resources such as preparing ERISA wrap documents, preparing cafeteria plan documents, as well as performing non-discrimination tests. In our benefits administration division, we have approximately 3,200 clients amounting to more than 200,000 participants throughout the nation. Some of our services within this division, we do offer debit cards for our reimbursement accounts. We also have something referred to as Crosscheck, where we get automatic claims feeds from certain insurance companies so that we can trigger automatic reimbursements. We also are a vendor with our HSA account with Healthcare Service Corporation, also known as HCSC. They are the parent company of Blue Cross Blue Shield of Illinois, Montana, New Mexico, Oklahoma, and Texas. We have a number of different resources available with our benefits administration department, including an online benefits portal, a mobile app, and a number of different educational and enrollment resources. Be on the lookout. We do have some upcoming enhancements to our FSA and our HRA products, as well as some system enhancements that we think will make our products much more better than they are today. For our general agency division, we also operate as a wholesaler, I'll call it. We offer concierge-like services to insurance producers who sell and work in the group markets, the individual markets, as well as the marketplace. We provide a number of different resources and assistance with sales, service, marketing, and business processing functions. Our goal is to offer a number of different insurance carriers to insurance producers and serve as a single support system for them. Lastly, we do have our own exchange and marketplace services. We do partner with a company referred to as IX Solutions, and they do have a product called IX Suite, which is our private exchange for employers. It really is an alternative to traditional group benefits. It's mostly ideal for small businesses as well as medium to large-sized businesses that have part-time employees or retirees. We also offer the IX Store, which really is an online marketplace for individual consumers looking to purchase both on and off exchange health insurance plans. Now, we will provide our contact information for each of our departments at the very end of today's presentation. Now, on to the core of our presentation here for today. I want to start with what our objectives are, or what my objectives are for you, and what I hope that you take away today. I really want to cover sort of the who, what, where, when, how, why, as it relates to the ACA reporting and the employer responsibilities. So I'm going to start off with talking about why the reporting is required, and then I want to focus on which employers must complete the reporting, and then talk about which plans must be reported. In some instances, it is more than just the medical plan. Then we're going to spend the bulk of our time really talking about which forms need to be completed and how to complete those forms, going through some examples and providing some tips. Lastly, then talking about when the actual reporting is due. Now, we do have a disclaimer. We are not a law firm. We are not an accounting firm. But we do work very heavily and have been for the last 28 years in the employee benefits industry. So we do need you to understand that this presentation has been put together for informational purposes only. It's not to be considered or used as legal or tax advice. And prior to acting on any information that you hear today or see today, we simply ask that you consult with your other professional resources. With that being said, I want to move on to our first topic and our first objective: why is the reporting required? And I'm not going to spend a ton of time on this, not that it's not important, it's just that I think this part is actually one of the easier parts of the reporting process to understand. So as many of you are aware, the Affordable Care Act is now law, and there are several new requirements that have been phased in dating back to March 2010, and they continue to be phased in. Well, two of those new requirements are referred to as mandates. If you ask the regulators, they refer to these as shared responsibility provisions, but most of the industry refers to them as mandates. So the first mandate took effect in 2014 and is referred to as the individual mandate. Now, under the individual mandate, most people in our country are required to have health insurance or pay a penalty. Now, there are some exceptions to that rule or some exemptions, but for the bulk of people in the country, they are now required to have health insurance or pay a penalty. In the year 2016, that penalty can be as high as 2.5% of your income. And then effective 2015, there is now the employer shared responsibility provision, or what most of the industry refers to as the employer mandate. And that now requires most employers that have 50 or more employees to offer a health insurance plan to their employees, at least to their full-time employees, that is considered affordable and also has minimum value, or that employer risks the potential of making what's referred to as an assessable payment. I refer to the term assessable payment as a fancy term for penalty. So because of the new mandates, there is now a new requirement that certain information has to be reported to the IRS. The IRS has added some new code sections to the tax code. Under Code Section 6055, that's the part of the IRS code that requires reporting related to the individual mandate. This is the requirement that's going to help facilitate with the IRS who does and doesn't have coverage and who should be subject to a penalty if they lack coverage thereof. And then under the employer mandate, it was codified under Section 6056, and that is the requirement for employers that have 50 or more employees to submit certain reporting information to the IRS so that they can understand if any assessable payments or penalties will apply. So I hope that makes sense and gives you some background information as to why the reporting is required. I wanted to keep that part a little more simple so that we can be a little more practical in some of our other objectives. So our second objective of the day is understanding which employers are subject to the reporting. And this is not overly complicated as well to understand. Really, there's one of two buckets that may come into play that will determine whether you are or are not subject to reporting. And when we talk about who's subject to the reporting, I'm only going to focus today on which employers are subject to the reporting. In many instances, insurance companies have to do the reporting, or in other instances, the health insurance exchanges have to do the reporting. But my focus here for today is helping you understand which employers are subject to the reporting. So the first, employers of any size, 1 or 2 employees all the way up to several hundred or several thousand employees, if you offer a self-insured medical plan, you are subject to completing new reporting. And that new reporting is required under Code Section 6055, which helps the IRS enforce the individual mandate. There is also a secondary purpose for the reporting. I indicated the primary reason originally was because of the new individual and employer mandates. But there is also a secondary reason, and the reporting does also help the IRS determine which individuals might be eligible for subsidized coverage on the new insurance exchanges. Those individuals who are enrolled in coverage elsewhere are disqualified from any subsidies. So this reporting does also have a secondary purpose. But the understanding here, or the takeaway here, is that if you are an employer of any size, both small, medium, and large, and you have a self-insured plan, you will be required to do some reporting. Additionally, we talked about the employer mandate, the new reporting requirements under Code Section 6056. If you are an employer with 50 or more employers, regardless of whether you offer coverage or you don't offer coverage, and if you do offer coverage, regardless of whether that's self-insured coverage or fully insured coverage, you do now have reporting obligations under Code Section 6056. If you are an employer with 50 or more employees, you are referred to as an applicable large employer, or the acronym is ALE, A-L-E. And your ALE status is based on the number of employees in general that you had in the prior year. So the reporting that we're talking about right now, that's upcoming later this year, that's due later this year, is based on employers who had 50 or more employees in 2014. Because if you had 50 or more employees in 2014, that would make you an applicable large employer for 2015, thus triggering reporting requirements in 2016. So keep that in the back of your mind if you were unaware of that. And again, the reporting here is required because you have 50 or more employees and are subject to the employer mandate. Your primary reason for the reporting is to help the IRS facilitate that employer mandate, determine if any penalties apply, and as a secondary reason, to help the IRS also administer subsidies in the exchange. Any employee who is offered an affordable health insurance plan that provides minimum value is ineligible for subsidies in the exchange. So we have two reasons with the reporting, the facilitation of the mandates as well as facilitation of the subsidies as a secondary reason. Now, we oftentimes do get asked questions, are there any exceptions? Are there any employers that are exempt from the employer mandate? Well, if you don't offer a self-insured plan or you are not an applicable large employer, then that would exempt you from the reporting obligations. However, there are no exceptions for other types of companies. So regardless of whether you are a public company, a private company, a state and local government, if you're a charitable or nonprofit organization or any of the other types of organizations that you see on your screen, you are subject to the reporting. So the simple takeaway here is that there are no exceptions if you do have a self-insured plan or you do have 50 or more employees. Now, I want to next talk about which plans are subject to the reporting requirements. And I think this will be rather easy to understand after we go through a few slides here. But in general, we're looking, when we take a look at the reporting and the reason for the reporting, right, it's because of the individual mandate and the employer mandate, right? And the individual mandate says you have to have a health insurance plan or potentially pay a penalty, and the employer mandate says you have to offer a health insurance plan that's affordable and has minimum value, or you potentially risk a penalty. So really, when we talk about the reporting, we're primarily looking at the medical plan. So it does not matter if it's a fully insured medical plan, a self-insured medical plan, a grandfathered medical plan, a non-grandfathered medical plan, a retiree medical plan. If it's a medical plan, that's going to get reported to the IRS. Now, in some instances, there are health flexible spending accounts and health reimbursement arrangements that are subject to the reporting. And it's not because of the employer mandate, but it's because of the individual mandate. So in some instances, depending on how your FSA and HRA is structured, it may be considered under the law as what's referred to minimum essential coverage, which is a type of health plan that satisfies the individual mandate. So I'm going to elaborate on that in just a moment. But I want to next talk to you about plans that don't have to be reported. And we're really looking at anything that's not a medical plan. So your dental plans, your vision plans, short-term, long-term disability plans, any sort of plan that supplements the primary health plan. Government-sponsored plans are not subject to the reporting. Things like Medicare and Medicaid are not subject to the reporting. Long-term care, health savings accounts, those types of things don't need to be reported, and that should probably make sense as to why they don't need to be reported, because under the individual mandate, you're not obligated to have that type of coverage or pay a penalty. Under the employer mandate, you're not obligated to offer dental or vision or disability or risk a penalty. So there's no reason that the IRS needs you to report information on that. in terms of the new ACA reporting requirements. But I want to take a step backwards and talk to you again a little bit about those health FSAs and those HRAs that might be subject to the reporting. Now, I would suspect that for most of you, the health FSA, assuming you offer one, you will not have to report any information on it. You do not have to report anything about the health FSA if it's considered what the government calls an accepted benefit. And in order to meet the definition of an accepted benefit, two conditions must be satisfied. The first is referred to as an availability condition. And that means that the only FSA participants are those that are also offered a group health plan by virtue of employment. So they don't have to enroll in the group health plan, they just have to be offered a group health plan. And then there's something referred to as the maximum benefit condition, which most employers will satisfy because most employers don't make any contribution to the health FSA. They simply allow the employee to salary reduce a contribution to the FSA. So you will satisfy the maximum benefit condition as long as you as the employer are not contributing more than $500, I should say the greater of $500 or a dollar-for-dollar match of employee contribution. So as an example, if an employee contributed $1,000 to the FSA, you as the employer could contribute $1,000 to the FSA. But if an employee only contributed $200 to the FSA, you as an employer could contribute up to $500 because it is the greater of $500 or a dollar-for-dollar match. Again, because most employers don't contribute any of their own money to the account, the maximum benefit condition usually is satisfied very easily. It's that availability condition that sometimes we find might not be satisfied. Now, I do want to point out that back in 2013, the IRS did issue a notice. It's referred to as Notice 2013-54, and they said essentially in that notice, to summarize at a high level, was about a 14-page notice that said, health FSAs for plan years on or after January 1st, 2014 must satisfy these two conditions and must be considered an accepted benefit going forward. If they do not, then they become subject to a whole bunch of the other Affordable Care Act market reforms of which they cannot comply. So if you have been following the rules, then you should know that your health FSA must be structured this way going forward. If you were unaware of the rules, and your health FSA does not meet one of these conditions, then it is subject to the reporting. And you do have to look at whether or not the conditions are satisfied on an employee-by-employee basis. So it could meet the conditions for certain employees, but not for others. And again, the reason this has to be reported is because the IRS then thinks, or the regulators then thinks, this plan starts to look and feel more like a traditional medical plan, and therefore we're going to consider it minimum essential coverage, and we want you to report on it for purposes of the individual mandate. Has nothing to do with the employer mandate, purely based on the individual mandate. Now, when we talk about our health reimbursement arrangements, I would say most are probably not going to be subject to the reporting, but there are going to be a handful that will be. I'll start with the ones that are not subject to the reporting. And those are going to be those HRAs that are integrated with a medical plan offered by the same plan sponsor. And that's going to be your most common type of HRA that we see and that we administer. And that's going to be one typically that is directly tied to a health plan offered by the same employer. And the HRA typically will offset, maybe some deductibles or copays or other out-of-pocket expenses. There's also no reporting requirement if the HRA reimburses only accepted benefits. Again, that term comes up again. In the term, accepted benefits in the terms of the HRA world typically means an HRA that only reimburses things like dental or vision expenses. And then if you do offer a retiree HRA, there is no reporting obligation as long as those retirees are also covered by Medicare. So we are dealing with HRAs. When we are dealing with HRAs that are subject to the reporting, we then got to take a look at a couple unique circumstances that may come into play. Now, in some instances, an employer may have an HRA that's integrated with a medical plan offered by a different plan sponsor. So as an example, an employee may have a group health plan at their own employer, but they have coverage through an HRA at a different employer. And under those circumstances, because the HRA and the medical plan are not offered by the same plan sponsor, both the medical plan and the HRA are going to have to be reported by each applicable employer. Going back to retiree HRAs, if you do allow reimbursements for retirees that are not eligible for Medicare or not enrolled in Medicare, those are typically going to be your pre-65 retirees, the HRA must be reported. And then lastly, if there is a standalone HRA, it's not tied to any medical plan, it's providing reimbursements for active employees, and it reimburses medical expenses other than accepted benefits, so maybe things like prescriptions, doctor's visits, hospital visits, surgeries, those types of things. That's going to be subject to the reporting. I do have an asterisk there. That same IRS notice that talked about health FSAs and how they have to meet those two conditions for plan years January 1st, 2014 going forward, essentially eliminates those standalone HRAs that are reimbursing all kinds of medical expenses such as prescriptions and doctor's visits and others. So those types of HRAs are generally non-compliant, but you do come across some employers every now and then that still have them in place. So if you do have an HRA that is subject to the reporting, it is not because of the employer mandate, it's because of the individual mandate, because under the way the rules are written, they consider that minimum essential coverage that does qualify and meet the individual mandate requirements. So your primary takeaway from this section is really just make sure you understand which of the plans you offer are subject to the reporting. It could be more than just the medical plan. Again, in most instances, it's probably just going to be the medical plan, but it could, as we discussed, also be the FSA and or the HRA. All right, so now the bulk of our time here, the next 25 or 30 minutes here, we're going to talk about which forms need to be completed and by whom. And we're going to go through some tips and some examples, and I think this will be one of the greatest takeaways that you'll have from today's presentation. So there are different forms. These forms use different numbers than I've already talked about, right? I've talked about Code Section 6055 and Code Section 6056. Those are just parts of the Internal Revenue Code that talk about the requirement to do the reporting. Now we have some different form numbers. And I want to start, you just kind of want to take a look at what your situation is and what box you might fall under, because there are different requirements based on whether or not you have fewer than 50 employees or 50 or more employees, and there can be some different requirements depending on the type of coverage you offer, whether it's fully insured or self-insured. So just taking a look at the smaller employers, those that have fewer than 50 employees, I'll call them non-applicable large employers or non-ALs. If you take a look, if you have fewer than 50 and you don't offer coverage, there is no reporting requirement. If you have fewer than 50 employees and fully insured coverage, there is no requirement on behalf of the employer. The insurance company is going to do the reporting that is used primarily for facilitation of the individual mandate. However, if you have fewer than 50 employees and self-insured coverage, there is reporting that's required. Again, this is required because of the individual mandate. Now, not a whole lot of employers that have fewer than 50 employees have a self-insured plan, but there are some that are out there. And if you fall into that bucket, you're going to have to complete what's referred to as Form 1095B, and you're going to have to complete that one form per what's referred to as a responsible individual who is enrolled in coverage. I like to use also sort of as a synonymous term, substitute responsible individual with primary insured. As a self-insured small group, your requirement, again, is to help facilitate the individual mandate. They need to know everyone who's covered under the plan. So if you allow full-time employees, part-time employees, independent contractors, board members, whoever it is, you are going to report there. So it's not always just employees. It's also any non-employees that are covered under the plan. And then there is something referred to as a transmittal form or Form 1094B. You're going to submit one per employer there. It almost acts as a cover page, provides some general contact information of the employer that goes along with all the other forms. Now, if you are 50 or more employees, again, you are an applicable large employer, you're going to have to do reporting regardless of whether you offer coverage or regardless of what type of coverage you do offer. So with 50 or more employees and you do not offer coverage, you're going to have to complete Form 1095-C, and this is going to be one per full-time employee. And there's three parts to Form 1095-C. You're only going to have to complete parts 1 and 2 on Form 1095-C. Primary purpose of that form is to help, or at least parts 1 and 2 of that form are to help facilitate the employer mandate. And then one Form 1094-C is going to go along with that. Same requirements for 50 or more employees and fully insured coverage. Parts 1 and 2 of Form 1095-C for each full-time employee, and then one Form 1094-C per employer, almost acts like a cover page. Again, for those 50 or more employees, no coverage or fully insured coverage, your reporting obligation is primarily used to help the IRS facilitate the employer mandate. Now, 50 or more employees and self-insured coverage, you have the greatest or the most amount of reporting to complete. You have to complete all sections of Form 1094 or 1095-C, I should say, parts 1, 2, and 3. Parts 1 and 2 will be used to help facilitate the individual mandate, or I should say the employer mandate. Parts 1 and 3 will be helped to facilitate the individual mandate. Then you have Form 1094-C, one per employer. So I'm going to start off with some examples here and really show you what the forms look like. So at the top here, you'll see I have a title. So focus on the title, because a lot of these forms that we're going to take a look at, they look very similar. So it could be easy to get lost when we go through these forms if you don't have sort of a heading that tells you who is subject to completing this form. So I'm going to start very briefly and talk about those employers that have less than 50 employees and self-insured coverage. Again, primary reason that we're doing the reporting here is to facilitate the individual mandate. So you'll see here, it's got some basic information. This is the top part of Form 1095-B for these smaller self-insured clients. Very basic information that needs to be completed. Up in Part 1, it's the responsible individual. That's going to be the primary insured, their general contact information. And I'm going to fly in a couple tips here for you to take a look at here if you are subject to completing this form. You'll see on line 8 here, it does ask to enter the identifying origin of the policy. For small employers that have fewer than 50 employees and self-insured coverage, you're going to enter the code B there. That's just going to indicate to the IRS that this is a group health plan. Over on line 9 that you'll see right here, what you'll need to take away from that is no information is required there. If you're having to do this, you're going to leave that part blank. That's specific to employers that are enrolled in a fully insured plan through the SHOP marketplace or the SHOP exchange that's administered by the federal government. And then I think a big takeaway here is tip 3. You do not need to complete any of Part 2. So in this top part of Form 1095-B, if you are fewer than 50 employees self-insured, you're only completing Parts 1 and Parts 3. For insurance companies that fill this form out for fully insured plans, they complete Parts 1, 2, and 3. But as an employer who is self-insured, you get the benefit of getting to skip one of those sections. So just understand that your only obligation is to do Parts 1 and Parts 3. Now, the bottom section of Form 1095-B is where you're going to enter in information on who is covered. Okay, so we've got some simple takeaways from what you need to do here is that in this column, this first column here, name of covered individuals, that's where you're going to enter the name of the responsible individual. So that will be your primary insured, oftentimes the employee, but it could also be a non-employee, as well as all of their covered dependents. So the spouse that's on the plan, the children that are on the plan, if domestic partners are allowed on the plan, whatever it is, you're going to enter those dependents on there along with their Social Security number. If you do not have their Social Security number, you are able to use their date of birth. Then you're supposed to check off which months that each individual had coverage. And the main takeaway that I want you to have from there is that partial months of coverage should be checked off as having coverage. So if someone enrolls in the plan, let's say January 15th, you are going to check off the month of January as having coverage. Again, this section of the form and this form altogether is used to enforce the individual mandate, and under the individual mandate rules, as long as you had coverage for one day of the month, you're considered as having coverage for that entire month. So this Form 1095B is relatively simple to complete. Really just general contact information of the employee and the employer on the top part of the form, and then indicating which individuals are covered and for which months under the bottom section. And that's really all it is to Form 1095B. As I mentioned, there is a transmittal form, also referred to as Form 1094B, and one of these forms has to be submitted with all of the other Form 1095Bs. And this is a very straightforward and basic form. You're just really indicating the name of the employer, the tax ID number of the employer, who's the primary point of contact. You're going to indicate down here on line, I believe it's line number 9, how many of the Form 1095Bs are you submitting along with this Form 1094B, and then you're signing off on it. And that's really it. So if you are fewer than 50 employees with self-insured coverage, that is your obligation. One Form 1095B for each responsible individual, and then one Form 1094B. So rather straightforward. I didn't spend a whole lot of time on these particular forms because we don't find a whole lot of employers that are fewer than 50 employees with self-insured coverage. So what I want to do next then is focus on employers that have 50 or more employees. This is who we are talking with on several occasions, or with insurance brokers that have clients of this size that have a reporting obligation because of the employer mandate, and in some instances with self-insured coverage because of the individual mandate. So this form is a little more complex than the forms that we just took a look at. So what we're looking at here is the top part of Form 1095C. So we've got the same number forms. So we use 1095, but we're using a letter C at the end of these forms as opposed to the letter B. And when I say this form applies to 50 or more employees, it does not matter if you don't offer coverage, if you do offer coverage, or what type of coverage you offer. This form applies to you. Now, the top part 1 of Form 1095C, straightforward. Contact information of the employee, typically full-time employee information is what's going to go in there. And then you're going to put on the right side of Part 1 information about the employer, employer name, tax ID number, and so forth. But it really becomes Part 2 where most of the questions come up. And Part 2 requires a lot of information, or a lot of new information that employers probably haven't been used to providing, or for that matter, reporting to anybody. And I've got a couple tips that I want to go through first. So tip number 1 is, if you're doing the reporting or trying to do the reporting on your own or helping somebody do the reporting, you really need to get to know the codes that are used in lines 14 and lines 16. So you'll see line 14, it says offer of coverage, enter required code. Line 16 says applicable section 4980H safe harbor, enter code if applicable. You won't always enter a code in 16, but we're going to spend a lot of time going through the codes on lines 14 and 16. And then tip number 2 here, on line 15 is where you got to enter some premium information. And according to the rules, this part 2 here, again, this is the information that's primarily going to help with facilitation of the employer mandate by the IRS. It says you should enter the premium on line 15 of the employee's share of premium for self-only coverage for the least expensive plan that's offered. So many employers offer several plan options to their employees. You're going to take a look at the lowest priced plan with minimum value, and you're just going to look at what's the employee share of premium if they enroll just themselves. So don't worry about what the premium is if they offer or they enroll their spouse or their children or someone else. Just for looking at the single-only rate, employee share of premium, lowest price plan. So lines 14 and 16, there's a lot of codes that could come into play. So if you take a look on the bottom left-hand side of the screen, I'm not going to go through every code in depth, but I've summarized what the codes are. We refer to line 14 as the 1 series code. You're really entering in information by virtue of using a code that starts with 1 that's followed by a letter. And that's going to tell the IRS, was coverage offered, and if so, tell me a little bit more about that offer. So as an example, you'll take a look at code 1E, which will probably be a common code used by many, is that coverage was offered to the employee, their spouse, and their children. But if coverage was only offered, let's say, to the employee and not to the child or the spouse, then we would be using a different code. So it's really just telling the IRS, was coverage offered and who was it offered to, or in some instances, maybe a code 1H would come into play where there was no offer of coverage. Okay? So then we jump over to the line 16 codes, and again, that's elaborating a little bit more on the offer of coverage. So, okay, I offered coverage, what happened? Okay, code 2C will probably come into play a lot. The employee enrolled in coverage. Okay? Or maybe the employee was in a waiting period. They're a new hire, and they have a waiting period before they're eligible. We're going to use code 2D, which is a fancy term. It says they're in a section 4980HB limited non-assessment period. That code's typically what we use when somebody's in a waiting period, or if you have a variable hour employee and they're in a measurement period, we're going to use code 2D. There are other codes that could come into play, like code 2A. Maybe there was no offer of coverage because the employee was not employed at the employer during the month. So I'm not going to go through every code in depth just because of our time constraints. I thought it would be better to go through some examples and show you how to fill out lines 14, 15, and 16. So our first example here, we've got a gentleman by the name of Bob. He's offered the opportunity to enroll himself, his spouse, and his dependents in coverage for the entire 2015 year. Okay, and we know at least in this scenario, the premium for self-only coverage for the lowest price plan offered to Bob is $100 per month. And we know Bob enrolls in coverage and does so for the entire year. So because Bob has a consistent offer throughout the year, the premium stayed the same throughout the year, and he was enrolled in coverage for all 12 months, we get to enter some simple codes in and some simple information into lines 14, 15, and 16. And on my next slide here, it just tells us what those codes really mean. So we know that coverage was offered to Bob and his entire family for all 12 months, so we're going to use code 1E. Okay? We know that the premium was $100 per month for the lowest price plan just for Bob enrolling himself, so we're going to include $100 per month in that first box there, and we know that Bob enrolled in coverage. 2C is the code that we would use. So for an employee that is in a scenario like that, the coding and the information that entered really isn't all that overwhelming. One thing I do want to point out is in line 15, we indicate the premium is $100.00 per month. The IRS does want you to include not only the dollars, but the cents on the reporting. So if there's a takeaway there, that's what it would be. All right, so moving along, we've got another example here. Same scenario as before. Somebody's offered coverage, entire family, $100 per month. But in this scenario, the employee waives coverage. They decide not to waive it, but the employer has determined that coverage is affordable in relation to their W-2 wages. So what we would then do there is say, okay, we have code 1E in line 14. We've offered coverage to the employee, spouse, and the dependents. That coverage would have been $100 per month for self-only coverage for the lowest price plan. The employee did not enroll in coverage, but it was affordable. So the employer is going to want to use code 2F, which is indicating that coverage is affordable in relation to their W-2. So even though the employee did not enroll in coverage, they did have an affordable option. Therefore, you're telling the IRS that for this particular employee, you should not be able to penalize me because he did have an affordable option at the employer. Now, it starts to get a little more complicated when we have somebody that doesn't have consistent codes and premiums that can be used throughout the entire year. So in this scenario, let's say we have a individual by the name of Carol. She's hired on May 15th, okay? She's only offered coverage for herself and her children, not her spouse, and she's offered coverage as of July 15th. We're going to use that same $100 per month as the premium for the lowest price plan. We're going to assume coverage is affordable based on her W-2, and in this scenario, she actually enrolls in coverage. So you'll see we've got two different codes that are being used in line 14. We've got 1H and 1C. We've got premium we're not entering in line 15 until August. And we've got three different codes that we're using in line 16. So let's dissect those codes and what they mean. So you'll see here in line 14, we're going to use code 1H for the months of January through July. We're indicating that there was no offer of coverage. Remember, she wasn't hired till May 15th, and she was in a waiting period for 60 days. Then we're going to use code 1C, indicating that coverage was offered to the employee and her dependents. If you recall, no coverage was offered to the spouse. We're going to show that $100 a month premium started in August. And then down here in line 16, we're going to say, we're going to use code 2A for January through April, saying the employee was not employed during the month. Then we're going to use code 2D for May through July, indicating they were in a limited non-assessment period. In this case, it's a waiting period. And then we're going to use code 2C starting in August, indicating the employee enrolled in coverage. So a couple tips here to take away. If you recall from the example on the previous slide, Carol was offered coverage as of July 15th, but we're not stating she was offered coverage here until the month of August. Okay? And that's because under the employer mandate, an offer of coverage is only considered an offer if it's for the entire month. Then tip number 2, we had two codes that applied. The coverage was affordable based on Carol's W-2, but Carol also enrolled. So there's two different codes. Well, based on the IRS instructions, it says if somebody enrolls in coverage, use that code 2C indicating they enrolled in coverage instead of the affordability safe harbor code. Okay, next example here. We've got Sharon. She's eligible for coverage for herself and her entire family. Premium for the lowest price plan is $100 a month. Carol enrolls in coverage, but on June 15th, she quits her job. She's offered COBRA as of June 15th, but she rejects COBRA. So let's take a look. I'm just going to jump to the next slide here for time and show you that here in line 114, we're going to show Carol was offered coverage and her entire family was. But then we're going to use code 1H stating she was not offered coverage even though she was offered COBRA. The reason being is she rejected COBRA. And down here you can see the different applicable codes. 2C was enrolled in coverage, but then 2B happens in June. This was the month that she quit and was no longer a full-time employee, and then 2A was not an employee for the rest of the year. So a couple, or I should just say one tip there. Even though Carol was offered COBRA coverage, it's indicated that there was no offer of coverage on line 14 if she rejects COBRA. So remember, June 15th she quit. She was offered COBRA. We're going to say no offer if she rejects. Okay, my last example here before we move on to some other sections is the same scenario that we just had, except in this scenario we have a woman by the name of Sharon. She quits as of June 15th and she elects COBRA, and that COBRA rate is $500 per month. So in this scenario, we're going to show something pretty standard. We're going to show coverage was offered to the employee, spouse, and dependents, and we're going to show that code's consistent for all 12 months. And because she was enrolled the entire 12 months, we're going to state that she was enrolled for the entire 12 months using code 2C. The only thing that changes here is the premium. We know that the premium went from $100 per month for the lowest price plan to $500 per month for the lowest price plan based on the COBRA rate. So that is our only difference in that example. Now we do have a third part of Form 1095-C, and this should look very familiar to the bottom part of Form 1095-B, and that's because it is. This part of the form is only required to be completed by employers with 50 or more employees and self-insured coverage. Okay? This is going to be the form where you're indicating information about who's enrolled in coverage. This is the part of the form that helps the IRS facilitate the individual mandate for those large employers with self-insured coverage. So you're going to put the name of anybody that's enrolled in coverage, so you're going to put the primary applicant as well as any spouses and dependents that are on there. Remember, partial months of coverage should be checked off as having coverage. And employers with 50 or more employees and fully insured coverage, you get a break of not having to do this section of the form because the insurance company that you have will do the individual mandate reporting. So a couple takeaways for 50 or more employees and self-insured coverage. You've got to complete all parts of Form 1095-C, parts 1, 2, and 3. You're going to complete a Form 1095-C for every full-time employee to help facilitate the employer mandate, but you also got to complete a form for non-full-time employees who are enrolled in coverage. That could be any part-timers, former employees covered by COBRA or retirees or independent contractors. You're completing the reporting for those non-full-time employees to facilitate the individual mandate. Another takeaway at the bottom here, always remember in Part 2, an offer of coverage is only considered an offer of coverage if it's for the entire month. And that's what the employer mandate says. But in Part 3, a person is considered to be enrolled in coverage for the month even if they're only enrolled for a portion of the month. So you'll have, that might look a little funky when you're putting the form together. If somebody's enrolled in coverage on January 15th, you're not going to consider an offer until February in Part 2, but you're going to consider them enrolled in Part 3 for the month of January. So, and it's just because the employer mandate and the individual mandate are enforced a little bit differently. So you have to keep that in mind. That's one little, I'll call it a nuance with the reporting. Now, Form 1094-C. This is also referred to as a transmittal form. This is one form completed by each applicable large employer member. If you are part of a controlled group, each member of the controlled group would complete this form separately. Now, Part 1 of Form 1095-C or 1094-C is pretty straightforward. You're basically putting some general contact information about the employer on the form. Part 2, though, gets a little more complicated. In particular, I want to focus on line 22. Do any of these 4 boxes apply to you? And most people, when I talk to them and they look at this line, they have no idea what it means. So I briefly want to cover what each box means. And I also want to point out that it's optional to check off these boxes if you do choose, if you do indicate that one does apply. You do not have to check off the box if you choose not to. But I'll tell you what you get. So the first box is the qualifying offer. This is where you offer coverage to a full-time employee for the entire year. Their spouse and children can also get on the plan, and coverage is considered affordable to them in relation to the federal poverty level. Okay? If you meet those requirements, you're considered to have made a qualifying offer to your full-time employee. What you get from that is on Form 1095-C, you enter code 1A as a qualifying offer for all 12 months. If you do want to move forward with that, you do have a qualifying offer and you optionally want to check off that box, you must not enter the premium on line 15. So you get a break. There's one line that you don't have to complete. You don't have to indicate what the premium is. And then if you are an applicable large employer and you offer a fully insured plan, or you offer a self-insured plan in which the employee waives coverage for all 12 months, then you do not have to provide a copy of Form 1095-C to the employee. Instead, you get to provide a written statement to them with certain information that indicates they were made a qualifying offer, and because they were given a qualifying offer, they are not going to be eligible for subsidies in the exchange. Unfortunately, if you are self-insured, if you are an applicable large employer with self-insured coverage and an employee does enroll, you still do have to provide them a copy of Form 1095-C, and that's because of the individual mandate. They need to have some sort of tax form to help them file their taxes indicating the months that they were enrolled in coverage. Now, the qualifying offer method transition relief is a little bit of a hybrid of what we just talked about. This is where you make a qualifying offer to 95% of full-time employees, but not necessarily for all 12 months of the year. So it's for one or more months in the year. Now, you can use this safe harbor relief for the 2015 reporting year only. Your impact to Form 1095-C is that you get to enter code 1A for the months there was a qualifying offer, code 1I for the months there was not a qualifying offer on line 14. You do not enter in the premium on line 15, so you get a break there. And same thing with regards to providing a copy of Form 1095-C. You do not have to provide a copy of Form 1095-C for those individuals that had a qualifying offer for all 12 months, but only if coverage was fully insured or coverage was self-insured and the employee did not enroll for the entire year. Now, this box might come into play for many of you. This is what's called the Section 4980H transition relief. If you had 50 to 99 employees, again, 50 to 99 employees in 2014, most of you are not subject to employer mandate penalties in 2015, but you still are subject to the reporting. So if you fall in that bucket, you're probably going to want to check off this particular box. It's also available, this transition relief is also available to employers with 100 or more employees that have a non-calendar year plan. Most employers in this category are not subject to penalties under the employer mandate until the start date of their plan year in 2015. Now, in order to qualify, you must not have changed your plan year to a later date as of December 27, 2012 or later. Now, for those of you that have 100 or more and operate a non-calendar year plan, on line 16, you're going to want to use code 2I for the months prior to the renewal date, which would indicate to the IRS that you have a non-calendar year plan and you cannot penalize me for the months prior to my renewal date. Now, the last transition relief offer is the 98% offer method. This is where you offer coverage that's considered affordable with minimum value to at least 98% of your full-time employees using any affordability method. So it could be in relation to their monthly rate of pay, in relation to their W-2, or in relation to the federal poverty level. You must also offer coverage to your dependents. If you do check this off, then you do not have to provide your monthly full-time employee count on Part 3 of Form 1094-C. So Part 3 we haven't talked about yet, but this is what Part 3 looks like. Over here in the first column, you're going to be indicating the months that you made. This is 2015 reporting, so the months that you offered minimum essential coverage to at least 70% of your employees. You're going to put your full-time employee account there unless you checked off the 98% offer method. You're going to put your total monthly employee account in this particular column. That's both full-time plus full-time equivalents. If you are part of an aggregated or controlled group, you're going to check off these boxes here. And then over here in the last column, that's going to be the Section 4980H transition relief. You're going to enter the letter A if you have 50 to 99 employees, and the letter B if you have 100 or more employees for the months prior to your renewal date. All right, so the last part of Form 1095-C only applies to those that are part of an aggregated or controlled group. So if you are not, this section will not apply to you. But if this is applicable, you will list the other members that are part of your controlled group here. So you'll list them by name and tax ID number. So just keep that in mind. This section is only for those with an aggregated or controlled group. Now, takeaways here. If you have 50 or more employees in self-insured coverage, your responsibility is to complete the B forms. You're going to indicate the months that everybody that was covered under your plan was covered. And again, the primary purpose is to help the IRS enforce the individual mandates. If you're 50 or more employees with fully insured coverage, or for that matter, no coverage, your responsibility is to complete the C forms. You get the benefit of only having to do Parts 1 and Parts 2 on Form 1095-C, and the primary purpose of this form, again, is to help the IRS enforce the employer mandates. If you are 50 or more employees with self-insured coverage, your responsibility is to complete the C forms and all parts of Form 1095-C. So you are a large employer plus you're self-insured. They say your obligation is to facilitate reporting that helps with both the individual mandate and the employer mandate. Okay, so the last topic I want to touch on briefly here is when is the reporting due? The 2015 reporting due dates have been extended. You have an obligation, if you are subject to the reporting, to give a copy of the applicable Form 1095 to each responsible individual by March 31st. So you have, 29 days to get this done if you haven't done it already. And then you have to file forms to the IRS. This year you have until May 31st if you're filing manually, until June 30th if you're filing electronically. Just understand if you do have 250 or more Form 1095s that you're filing, you have to do it electronically. Moving forward, you have the same deadlines as those that apply to Form W-2 reporting. So next year when the reporting comes around, you're going to have to get the applicable Form 1095 to your employees or former employees by January 31st, and then copies to the IRS by February 28th if filing manually, March 31st if filing electronically. So just a couple final comments here. We've had a lot of people say, well, heck, this reporting is going to require a lot of work. I'm just not going to do it. And of course, you have that right to make that decision, but just beware the penalties are steep. Penalties can be as high as $500 per person. There's a $250 penalty for not filing with the IRS and a $250 penalty for not providing a copy of the form to the responsible individual. Penalties are capped at $3 million per reporting year. Now, there are other penalties that do come into play if the reporting is incomplete or inaccurate, but the IRS has generally said for this first reporting year, they're going to waive those penalties. They understand this is new, so really just give it your best shot at doing the reporting, and likely no penalties will apply if there's anything that's incomplete or inaccurate. So the next steps for you, whether you have to do the reporting or you're helping somebody do the reporting, is really understand that the reporting really needs a corporate strategy because benefits are involved, because tax forms are involved, understanding which employees the reporting applies to. A lot of times you got to bring in multiple departments, HR, accounting, payroll, legal, all need to sort of be brought in to have a strategic plan to get the reporting done. It takes a lot of administrative work and a lot of administrative work to get it done by the deadline. So you really need to decide how you are going to complete the reporting or recommend the reporting to be completed. Really, there's three options. Somebody internally can, or some department can take on the burden of doing this and do it in-house. There is reporting software out there that can be licensed for a fee, so it helps with the process. It eases the online submission, but you are the one internally or a department internally is entering in the data, and the software sort of just pushes it out and populates forms to be delivered to employees. Or you can outsource it. There's a lot of companies out there now that are taking on the reporting liability. But if you haven't decided, again, the clock is really ticking now, especially with copies of the forms supposed to be provided by March 31st to applicable responsible individuals. We've covered a lot, and I've gone through some of it rather quickly, but there are line-by-line instructions for each of the applicable forms that tells you how to complete the box, and just, if you're unclear of what something means, provides definitions and information about it. You do not need to write this link down or these links down. We will send out a copy of this presentation that will include a hyperlink to this. And just, lastly, wanted to wrap up our objectives. Why is the reporting required? Well, as you now know, it's primarily because of the employer and the individual mandates, but as a secondary reason, it's also because of the facilitation of subsidies in the exchange. Which employers are subject to the reporting? You should now know, if you weren't aware, that any size employer with a self-insured medical plan, as well as any employer with 50 or more employees, regardless of the type of coverage offered, if any at all. Plans that have to be reported are typically just the medical, but sometimes it could also be the FSA and the HSA, or the HRA, I should say, not the HSA. How do you complete the forms? We've gone through each form, provided several tips and several examples, and again, we'll get you a copy of the presentation so you can see those tips and those examples. And then in terms of when the reporting is due, just understand that due dates are different this year than it is in future reporting years. So with that being said, I think I have 1 or 2 minutes left to take questions. So I'm going to take just a couple of questions. And if you do have questions, you can type them into the chat function or the Q&A, but I'm just going to take a couple quick ones and get us out of here on time. First question I see is, where does an employer go to file electronically? Great question, and as opposed to telling you a website, I'm going to tell you to do an internet search for a document referred to as Publication 5165. Again, Publication 5165. This is a document that's been published by the IRS that essentially is a guide to submitting electronically. So it tells you where to go, how the forms need to be submitted, or how the data needs to be transmitted. So I would encourage you to research and look up Publication 5165. Another question I see is, how can we file an extension, or are extensions available if we're running behind on completing the forms? Well, if you recall, there's 2 deadlines. Well, first I'll say yes, you can request extensions, but there are 2 extensions that have to be requested. Remember, this year, March 31st, forms are supposed to be provided to employees. In order to get an extension for that, you have to submit a written request or a written letter to the IRS requesting an extension, which will grant you a 30-day extension. Then there's other deadlines that apply to submitting the forms to the IRS. Remember, May 31st, filing electronically, June 30th, May 31st if filing manually, June 30th if filing electronically. There is a form out there. It's referred to as Form 8809. Again, Form 8809. If you submit that to the IRS prior to the due date, they will give you an extra 30 days to submit the reporting. You can actually submit that a second time and get an additional 30 days, so a total 60-day extension. But beyond that, extensions are generally not given unless there are some rather unique circumstances that apply. Okay, I'll take one more question here, and then that'll put us right at our time frame here. Is reporting required for employees who only worked for a short period of time during the year? And the answer is generally yes, it does. For purposes of, if you have self-insured coverage, remember, if an employee had coverage for just 1 day, then they're considered as having coverage for at least 1 full month. So from a self-insured standpoint, anybody that's covered under the plan for 1 day or more must be reported on. For employers that have 50 or more employees, anybody that was a full-time employee during the entire year, or during a portion of the year, I should say, must be reported on. So if you are 50 or more employees and you had maybe a group of employees that were only employed for 1 or 2 months during the year, yes, you are going to have to report on them. All right, well, I'm showing it is 1 minute after 12, so I'm going to go ahead and call it a wrap just for time constraints. I know we went through some of this stuff rather quickly. We will go ahead and send out a copy of this presentation to you, along with the HRCI recertification credits and SHRM professional development credits for those of you seeking continuing education. But thank you very much for your time. We will put on a number of other webinars throughout the year, trying to keep you up to speed with the information. And I hope you at least had a few takeaways today, and look forward to having you on another presentation in the future. Take care. Bye.